Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo, Modiba. Thanks for joining me. My guest tonight is Fungai Tarirah, Portfolio Manager at Rudiarius Capital Management, and our focus is on the recent listing on the Rwandan Stock Exchange, and specifically the coming IPO of Crystal Telecom. Fungai, before we delve into the IPO itself, I'd like to get a broad picture of the Rwandan market and economy. Your sense of this? This is the darling of Africa, right?
It has been and remains as such. Economic growth has been robust over quite a number of years now. And I think the biggest thing working in their favor is the fact that the regulators and the policymakers have been able to put in the right kinds of policies that are pro-growth, pro-private sector. Right. They're one of the first countries around the world, actually, that allowed you to register an operating business within 24 hours, actually within 2 hours from landing at the airport. You could actually do it at the airport. Yeah. And many other reforms which they've been able to put in place, which actually help who are pro-business and have actually encouraged the growth of the economy.
So you're saying there's a government out there that actually gets it?
There's quite a number, but this is one of the prize ones.
Yeah. Sure, okay. And in terms of the structure of the economy, very services driven, no commodities at all, and that's benefited them? Or they've been smart around enhancing that?
I think it's really about looking at what the nation has and then trying to find out how best to harness that to their benefit. The country itself the terrain is not necessarily the best for agriculture or even pastoral activity. Right. So you won't find a lot of that actually contributing to GDP, but they do have a large, relatively large and fast growing population, which they've actually successfully tapped into to try and provide a raft of quality services.
Now, you know, on the back of this buoyant economic environment and this business-friendly environment, does that mean that going forward we're likely to see a continuation of companies coming to the market and trying to raise capital specifically via listings rather than debt markets?
I think we'll see a combination of both. Why? Because you've still got a lot of financial institutions, both within the country and in the region, that are interested in financing projects and companies in Rwanda and in the region. And to that extent, I think the competition will be on as far as the funding sources are concerned. I think, generally speaking, the perception of being on a stock exchange, having external shareholders whom you may never have met, I still think that doesn't sit so well with quite a number of business operators. Right. And it takes time for that culture, that listing culture, to actually develop. So I think in the meantime, debt financing will actually steal the march on equity raising. But over time, I think that's a trend that's actually changing.
Which was great for guys like you and me who hopefully look to take advantage of listings to get us exposure to these markets. Now, in terms of, well, we say recent, it has been a little while in terms of the recent listings on the Rwandan Stock Exchange. A lot of those services related in keeping in touch with the rest of the economy.
You've got two local listings that have come on in recent times. So you're looking at Bank of Kigali, which is indeed services, lending to local retail and institutions. And you've also seen the local Heineken producer, Bralirwa, also come onto the market. Both of those companies have done reasonably well from an operating perspective, and that has actually shone through in the different share prices. Bralirwa continues to win awards within the wider family, where they have high efficiency ratings, high cleanliness ratings, the quality of water that they use in their product is also quite good, and so on. So that has actually been a very good advertisement on some of the good things that can happen on a local stock exchange. Most recently, we've seen Crystal Telecom come to market, and basically they're doing an IPO. The 20% shareholder, or a 20% shareholder, deciding to divest and putting that up as free float.
And it's 20% of MTN Rwanda.
Correct.
Okay.
Correct.
Now, MTN Rwanda, big player in the Rwandan telecoms market.
It's a big business. The #1 operator, 56% market share, and growing. They've got penetration in the region of about 60% in that market. So again, there's scope for the entire market to grow as well. And of course, on that journey, the market share for MTN Rwanda could also increase. If you look at neighboring countries, in Kenya, for example, the predominant player has almost 80% market share.
Sure.
They're managing to roll out, your typical sort of mobile telecoms services, but data is the biggest thing there as it is anywhere else in the world now, growing at about 50%, 60% on an annualized basis.
So, I mean, given the somewhat, well, relatively low penetration in terms of mobile penetration, does that mean that there's still scope in terms of growing voice revenue as well on top of the data?
Agreed, largely because you still don't have everybody having a SIM card. And the very first service most people are introduced to a mobile network is voice. But the world trend that people are moving away from voice more to data is also taking place in Rwanda. So down the line, it won't be surprising to see data revenue contributing more to the total
as you see around the world.
Yeah.
So I guess so you may expect that given where they are in terms of the life cycle of the mobile industry, that maybe you see a little bit higher margins there than you would in the slightly more developed markets from that perspective.
I think they find themselves in a unique situation where technology has moved quite remarkably over the last couple of years, and it gives them an opportunity to leapfrog some of the technologies in between and just focus on the newer, later sort of innovations that can actually earn them money while they deliver good services to the population. Mobile money, for example, is all the rage in Kenya, in Uganda, in Tanzania. So that region has a generally high acceptance of mobile money. That is something that they can actually skip to, learning the lessons from quite a number of their neighboring countries without having to go through the paces. SMS, I don't think, is ever going to really be a large part of their revenue mix, and it doesn't have to be. It's turning out to be an older technology that people are moving away from. So I think they are in a very good situation where you've got relatively low market penetration, but you've got these advances in technology that allow you to circumvent some of the interim stages and just get straight to where the rest of the world is, which I think makes it quite exciting.
Now, this broader listing in the context of Rwanda is actually quite a big one. So it presents investors looking to focus on that quite a nice opportunity potentially.
Yeah, so the number of listings in Rwanda goes up by 50%, from 2 to 3. But more importantly, it does take the locally listed market cap to just shy of about $1 billion, which makes it a relatively sizable market, especially given the size of the country itself. I think that's quite an achievement. And as we've seen elsewhere, it might start off slowly, but as and when the snowball picks up, you actually get a lot more companies gravitate towards the stock market, and that's something exciting to see.
So potentially liquidity is a potential issue there as well? Well,
to the extent that initially only 20% of the company's total shareholding is free float, that would be a bit of a difficulty. And the same goes for the already listed businesses, but over time would hope to see that liquidity improve.
Okay. Now, we've touched a little bit on, or in some detail on the IPOs in Rwanda. The theme, is that likely to continue throughout the continent? Are we seeing a little bit more traction in terms of companies coming to the market looking to raise capital via equity markets?
If you take a look at the rest of the continent, outside of South Africa, 2015 has actually been a very busy year for the investment bankers, because quite a number of IPOs have actually come through.
Of course, the investment bankers are smiling.
they have to, right? We've had, from where I sit, about 7 listings come through in 4 different countries, totaling $1.27 billion as far as the amount of money they're actually looking to raise.
Which is quite exciting.
Which is huge. And if you look at 2014, only $250 million, to my knowledge, $250 million was actually raised via IPOs. So a very large increase. and also quite a variety in terms of the types of companies.
If you had to theorize, what's really stimulating this demand for capital or access for capital in equity markets? Is it a function of debt being a little bit more expensive now?
I think two themes are playing out here. The first is the fact that quite a number of private equity investors have come to maturity in those investments,
right,
and are
so
looking
they're
for
looking to exit. Yeah.
And these deals are large enough for them to actually bring to market for them to do that. That's one. The other is quite a number of the businesses are actually looking for expansion capital. And the kinds of expansion that they actually need cannot be financed by debt because, as you say, the pricing of debt capital is kind of high, but also the duration that they're looking to finance these activities over is probably better suited to equity. So to that extent, they've actually been coming to the markets to try and raise financing. So it's exits largely by private equity investors, and also capital raising for expansion in the different areas that they actually operate.
And given you touched on it a little bit, that these new listings are across a broad range of industries, that's particularly exciting. Well, as an investor, that's exciting in terms of giving you a broader exposure. I mean, one of the things that we're very good at listing is either mining businesses or banks, right, in the continent. True. So if you have exposures to different sectors, all the better.
That helps out a lot. But I think because the issues are spread out across, as I mentioned, 4 different countries, it probably better suits the Pan-African investor more than someone who's focusing on an individual country. If you were to focus on an individual country, Egypt has been the place to be so far. They've had quite a number of issues come through: a medical services business, IDH, a confectionery business, Edita, a property development business, Emma. So they've had not only the numbers coming through, but also the diversity in terms of the kinds of IPOs that have actually come through on their market. But you've seen action elsewhere as well, and in many different sectors. We've seen a car parts manufacturer list in Tunisia. Right. We've seen some Moroccan property developers coming through as well. So, you know, a nice range.
Okay, that's quite exciting. Let's leave it there. Thank you, Fungai. Thanks to my guest, Fungai Tarirah, Portfolio Manager at Rudiarius Capital Management. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.